everyone. If you are new here, I am Noura, tax strategist and best-selling author. I help business owners and high-income professionals save money, stay compliant, and plan their taxes with confidence. And today, I want to talk to you about two important IRS updates. Updates that will affect both individuals and business owners going into 2026. We are going to cover year-end penalty relief for 2025, IRS interest rate for the first quarter of 2026, and most importantly, what these changes mean for you and how can you take advantage of them before the end of the year. Let's get started. The first update comes from the US Treasury and the IRS, and it is something that will matter to many employers, payroll teams, and businesses that have tipped employees and overtime structures. The IRS has announced transition penalty relief for tax year 2025. This relief applies to new reporting requirements under the One Big Beautiful Bill, especially for cash tips, qualified overtime compensation, and how these amounts appear on informational return. Now, here is what this means in simple terms. For tax year 2025, employers and payers will not face penalties if you fail to separately account for amounts designated as cash tip, separately reports qualified overtime compensation, or include those details on payee statements. 2025 is officially being treated as a transition year. The IRS understands that many employers don't yet have the system in place to properly track and report these categories. So rather than penalizing businesses during the rollout, they are giving a full year of grace. Why this matters? If you are a business owner with tipped employees, restaurants, salon, delivery companies, or if your business pays structure over time, you have time to update your payroll system. But don't ignore it. This relief is only for 2025. Enforcement will begin in 2026. So this is your chance to get prepared without the risk of penalties. IRS interest rates remain the same for quarter 1 2026. The second update is about interest rates, and while this might sound simple, it is actually a big deal for anyone who owes tax, pays estimated taxes, or runs a business. Starting January 1st, 2026, IRS interest rates will remain the same as they were in the last quarter of 2025. Here's what that looks like. 7% of individuals underpayments and overpayments, the same 7% for corporations overpayments, the standard underpayment and overpayment rates remain unchanged. Higher rates applies only to large corporate underpayments. So why is this important? Interest is what the IRS charges when you underpay your taxes. If rates increases, the cost of waiting goes up. If rates drop, the cost of borrowing from the IRS decreases. But when rates stay stable, it gives you something even better: predictability. You know exactly what you are dealing with. You can plan, you can estimate your liability, you can make payment arrangements knowing the rate won't suddenly spike. For small business owners and self-employed individuals, this stability makes year-end planning a lot easier. Now, let's bring both updates together. Here's how they create a planning window before the end of 2025. Number one, you can update payroll systems with zero penalty risk if your business handles tips, overtime, or irregular compensation. This is the year to get your payroll process in order before the IRS starts full enforcement in 2026. Number two, you can assess your 2025 tax liability with stable interest rates since the IRS rates for quarter 1 2026 are already set. You can plan your payment, reduce underpayment risk, and avoid surprises. Number three, you can fix estimated taxes now. If you've had changes in income, switched jobs, or added a side business, now is the time to correct your withholding or estimated payments. Number four, business owners can make smarter year-end decisions with penalty relief plus stable interest rates This is one of the most predictable planning season we've had in years. The bottom line, the IRS has given you a 1-year opportunity window, a transition year with fewer risks and predictable interest rates to help you plan. Use that window. So to recap, the IRS is giving you penalty relief for 2025 on new tip and overtime reporting requirements, but only for 2025. Interest rates will remain the same for the first quarter of 2026, giving you stability as you plan your year-end taxes. And right now is the perfect time to review your payroll systems, adjust your estimated taxes, and prepare for full compliance in 2026. If you are a business owner, high-income professional, or someone who wants to avoid surprises during tax season, this is your moment. I upload new videos every week with updates like this, so make sure to subscribe, ring the bell, and check out the related videos linked below. Thank you for watching, and I will see you in the next one.